Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, everyone, welcome to another week in the crypto markets and the broader market. The market has continued to kind of track the overall equities market in terms of being a bit slower. Bitcoin has obviously suffered a bit more in the last week, keep rejecting the 80,000 level, but we're back in the 70s, which is pretty good versus a month or two ago. Some other top line news: Western Union announced that they're going to be launching a stablecoin and a payment linked stablecoin card in the next month. State Street is launching tokenized fund services. And just today at the FOMC meeting, the Federal Reserve chose to hold rates steady. Not a huge surprise there. As always, though, here to talk about the tokens. So we will get right into them. So first, we're going to talk about CHG or Chiliz. So Chiliz, which is the sports blockchain, expanded their fan tokens this week to launch on the Base and Solana blockchains. So if you're not familiar with Chiliz, they've been around for several years. They operate their own layer one blockchain and they issue fan tokens. So fan tokens are issued by sport clubs and offer holders benefits like minor decisions for the clubs, access to exclusive content, and other rewards. There are fan tokens that exist for a bunch of the big European football or soccer teams. I believe there are also there's tokens for UFC teams as well. So quite a few. It's fairly far-reaching. These fan tokens have previously only been accessible though on the Chiliz blockchain, but they are now available for omni-chain distribution. The CHG token, however, is down about 10% this week, despite this positive development for them. Okay, next we're going to talk about Pump.fun. So yesterday, Pump.fun, the token launchpad, announced that they have burned all of the tokens it has bought back to date, worth about $370 million and representing about 36% of the circulating supply. So quite a few tokens here. The team also announced that they're going to be initiating a programmatic buyback of tokens using 50% of revenue going forward for the next year. So previously, Pump.fun, which I believe their token generation event was last summer, they used 100% of revenues to buy back their tokens. But a lot of people have been relatively upset or annoyed that the buybacks were not programmatic, not always viewable on chain, and they hadn't really ever been spelled out anywhere. So they've announced now that that's going to be kind of like set in stone. So the remaining 50%, though, it's going to be allocated to the Pump.fun treasury to fund ongoing initiatives and costs. Pump kind of explained in their post about the change that they really don't want to draw too much on their treasury reserves and really focus on, using that revenue. Consider too that they're not using 50% of revenue. It's or 50% of profits. It's 50% of revenue. So they obviously have ongoing costs in the background here. So Pump.fun, as like I said, they've struggled in recent months, particularly, and you can see that from, just the amount of revenue that they generate in crypto. So, I mean, they are literally one of the highest generating revenue businesses in crypto. And again, a lot of it is just their underperformance is really stemming from the lack of trust in the token buyback. For context, in the last 30 days, based on the last 30 days of data, Pump.fun is generating about $330 million of annualized revenue, giving it a price to sales of 3.3. So while initially the Pump token did shoot up about 10% on this news, Pump has since retraced its gains and is ending the week down 8.5%. All right, Ondo Finance. So yesterday, the tokenization project Ondo Finance announced that they're going to be adding proxy voting, and they're going to be and filing access for the 250 tokenized stocks and ETFs offered through their trading platform. Ondo operates essentially tokenized stock trading platform in addition to a few other products, and they've so far listed a ton of stocks on there for trading. So apparently this was built with the assistance of Broadbridge Financial Solutions, and the feature is supposed to help allow holders to view company filings and submit proxy votes just using their crypto wallet to log in. So typically these features are actually limited to individuals that have traditional brokerage accounts, and this is very cool to kind of see added to tokenized equities, just because this is a really fast growing sector of crypto. Just since launching in the last few months, as we've seen regulation kind of loosen up around these things, tokenized equities have grown to eclipse 1.2 billion in total assets. And these new features from Ondo are kind of just bridging that gap between those traditional and tokenized assets. So great to see, especially as tokenization continues to improve in this space. Ondo is down 2.7% for the week. Okay, and of course, I got to give you guys a little update on Aave following last week's crazy exploit. The kelp.io exploit that was last week caused Aave and a few other DeFi protocols to spin up what they were calling DeFi United, which is basically an initiative to fund the hole in Aave's balance sheet. So for those that missed it last week, I'm going to give a very, very short recap. But basically, an attacker was able to mint 293 million worth of RS ETH, which is from Kelp, using kelp.io's protocol, and they were able to do it without collateral backing. And then when they did is they swapped it for actual ETH on the lend borrow protocol Aave, and took that ETH and then sold it. So doing so, they left the Aave protocol with bad debt, about 190 million of it to be exact. So Aave, along with liquid staking providers Lido and EtherFi, initially pledged assets from their treasury to spin up DeFi United, which is designed to backstop the unbacked RS ETH deposited as collateral on Aave. Since spinning this up, though, in the last week, we've seen participation from Consensus, Stani Kulachov, Aave's founder, Mantle, the Layer 2, Layer 0, Inc. Foundation, which is Kraken's Layer 2, Athena, the DeFi project, Tron DAO, and many other smaller contributors and projects. They've collectively raised 132,650 ETH, which is worth about, give or take, $300 million. So huge, kind of community contribution to this effort, which was so great to see. On Tuesday or yesterday, Aave published a plan. They said they're going to, basically detailing how they're going to unwind that bad RS ETH position and ensure that all users are made whole. The execution of this plan does require some governance steps, but the process should begin to start in the coming days. Aave has held up pretty well considering the market and considering this pretty bad exploit. It is only down 1.3% for the week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.